Let's be real. Basic financial knowledge is lacking all over the world. For some reason, our schools just refuse to teach us financial literacy. And there's a cost to all of this. You see, this ignorance comes with a cost. 15% of adults have lost significant amounts of money due to their lack of financial understanding in 2022. So today, we're going to talk about 10 ways you can increase your financial IQ. Make sure to watch the entire video to learn all the essential tips, especially since number 8 is a game changer. Hello, and welcome back to Tides of Wealth, where you're just one sale away from financial freedom. All right, let's not waste any time. At number 1, check your daily transactions and monthly statements. Make it a habit to check your account balances daily using your mobile or online banking. This simple routine can provide valuable insights into your finances. Many banking apps offer personalized tips to help you save and spend smarter. Also, remember to review your monthly bank statements, whether you receive them digitally or on paper. These statements summarize all your monthly transactions, helping you keep track of your spending. This will help you understand where you stand and where you can make improvements. Which brings us to the second thing you need to do. Number 2, make a realistic budget. Creating a budget is essential for managing your money wisely. Start by assigning a purpose to every dollar you earn, ensuring that you cover your monthly expenses. Determine how much you plan to spend on groceries, gas, and other regular items to set boundaries. There are various budgeting strategies available, ranging from simple to more intricate. Which brings us to number 3, implement zero-based budgeting. Zero-based budgeting is a financial management method that involves assigning every dollar of your income to specific expenses, savings, or investments, leaving no funds unallocated. Unlike traditional budgeting, which adjusts previous budgets, zero-based budgeting starts fresh each time. This requires you to justify every expense and prioritize financial goals. By adopting zero-based budgeting, you gain greater control over your finances, prioritize intentional spending, and increase financial awareness. So, what do you need to do? Well, first, write down all the money you get each month from jobs, side gigs, or anything else you earn from. Then, divide your spending into 2 types: fixed costs, like rent and bills, that stay the same every month, and variable costs, like groceries or going out with friends, which can change. After covering your costs, divide up the rest of your money for savings, investments, or paying off any debts you have. Zero-based budgeting helps you see where you might be spending too much so you can put that money towards your goals. It's important to keep checking and adjusting your budget regularly to stay on track and make sure you're using your money wisely. This method helps you get better at managing your money and being more careful with how you spend it. Number 4, hit the pause button. The 30-day rule for savvy spenders. Have you ever bought something on a whim and later regretted it? You know, that rush of excitement when you see something cool and just have to have it? Well, there's a simple trick to avoid those moments of buyer's remorse and improve your financial health. It's called the 30-day rule. Here's how it works. When you're tempted to buy something, give yourself a 30-day waiting period before making the purchase. This waiting period can help in a few ways. Firstly, it gives you time to reconsider whether you really need the item. Sometimes that initial excitement can cloud our judgment. Waiting 30 days allows that excitement to settle so you can decide more clearly if it's something you truly want or if it's just a passing fancy. Secondly, it helps you think about whether the purchase fits into your budget and financial goals. Is there a better way to use that money? Taking time allows you to make a more informed decision. Thirdly, it gives you the opportunity to do some research. Maybe there's a better deal out there, or you can find the same item for a lower price. With a month to think, you have the chance to explore different options. Lastly, waiting can spark creativity. Maybe you can find an alternative solution, like making the item yourself or borrowing it from a friend. This encourages resourcefulness and helps you develop smarter spending habits. Remember, there are exceptions to the rule. Urgent needs like groceries or essential repairs probably don't need a 30-day wait. But for non-essentials, this rule can be really helpful in avoiding impulse buys. We've covered some quick ways to increase your financial IQ. Now let's talk about some long-term changes in how you think about money. Oh, and if you're having fun, make sure to subscribe for more videos like this. Number 5, make an effort to understand real-world examples of financial success and mistakes. Studying real-life examples of both financial successes and failures can provide valuable lessons for managing your own finances. By examining case studies, you can learn about different strategies, decision-making approaches, and external factors that lead to positive or negative outcomes. For example, when you see how well Warren Buffett invests or how big companies like Apple and Amazon have grown, you can learn about making smart investments, running a business well, and changing with the market. On the other hand, analyzing failures, such as the Enron scandal or the 2008 financial crisis, can highlight the dangers of unethical behavior, excessive risk-taking, and following the crowd blindly. By understanding the reasons behind these successes and failures, you can gain insights into investment techniques, the importance of long-term planning, and the role of innovation in creating wealth. You can also learn to avoid common pitfalls and develop a more cautious and informed approach to managing your finances. Ultimately, studying real-world case studies can help you become a more responsible and knowledgeable steward of your own finances, better equipped to navigate potential challenges and achieve your financial goals. Number 6. Learn to carefully analyze financial news. Learning to read financial news critically is essential for making informed decisions in today's media landscape. There's a lot of hype out there. Focus on what's actually helpful for your finances. Start by evaluating the credibility and potential biases of the news source. Consider who owns or publishes the news and whether they have any vested interests, like advertising pressures or political affiliations. Be on the lookout for conflicts of interest and try to cross-reference information from multiple sources to get a more balanced perspective. Focus on the quality of analysis provided in the news. Look for news articles that are well-researched and backed up with evidence rather than relying on opinions or anecdotes. By improving your ability to critically assess financial news, you can avoid making impulsive decisions based on unreliable or biased information. Remember to always follow the money and seek out trustworthy sources for accurate insights. Next, number 7. See how well your favorite brands are doing financially. Taking a closer look at the financials of your favorite brands can be both interesting and informative. By examining their financial statements, annual reports, and earnings, you can gain valuable insights into how these companies are performing. Start by checking out the company's income statement, balance sheet, and cash flow statement. These documents provide a quick overview of the company's financial health and help you to understand its revenue sources, profitability, and potential for growth. Not only that, but you need to pay attention to important metrics like revenue growth, profit margins, debt levels, and liquidity ratios. Comparing these numbers to industry standards or competitor data can give you a better idea of the company's strengths and weaknesses. Listening to earnings calls and reading annual reports can also provide valuable information about the company's strategic vision, management outlook, and potential risks or opportunities. You see, analyzing financials of your favorite brands not only helps you understand how they're doing financially, but also empowers you to make smarter decisions as both a consumer and an investor. Okay, now you need to be paying close attention, because what we're going to talk about is extremely important if you want to increase your financial IQ. Number 8, educate yourself. Building your financial IQ is key to mastering your finances. Just like any skill, it requires dedication and a commitment to learning. Fortunately, there's a wealth of resources available to help you along the way. Let's start with books and podcasts. Some finance books are popular for a reason. They cover a wide range of topics from budgeting and saving to investing and wealth building. These books offer relatable stories and real-life examples that make complex concepts easier to grasp. Learn from the experiences of successful financial authors and apply their wisdom to your own financial journey. Here are some books you can read. The Intelligent Investor by Benjamin Graham for overall understanding. I Will Teach You to Be Rich by Ramit Sethi, or The Simple Path to Wealth by J.L. Collins for beginners. And The Psychology of Money by Morgan Housel, or Rich Dad Poor Dad by Robert Kiyosaki for mindset. Of course, before you start reading, make sure to research the best book for your financial position and goals. Podcasts are also a convenient way to boost your financial knowledge, and what's amazing is that you can listen to them on the go while you're commuting, working out, or even relaxing. By listening to podcasts, you can stay informed about market trends, investment strategies, and personal finance tips. Here's a few podcasts you can check out. Bigger Pockets Money, or The Ramsey Show for personal finance. So Money for money mindset. Invest Like the Best, or The Motley Fool Money for investing. And Master the Basics with Millennial Investing or Planet Money. And if you're looking for recommendations or great financial content, do check out Tides of Wealth. We offer plenty of videos that will help you on your journey to financial freedom. All right, let's move on to number 9, wrangling your finances. Ever feel like your paycheck disappears before you even see it? With bills, groceries, gas, and other expenses, managing your money can be tough. But don't worry, there's a simple trick. Targeted accounts. One for the bills. Use one account just for paying bills. This makes it easy to keep track of what you owe each month. One for everyday expenses. Have another account for groceries, gas, and regular spending. Transfer a set amount of money into this account each payday to avoid overspending. And one for saving goals. Here's where it gets fun. Open separate savings accounts for things like a new car or a wedding. This helps you stay focused on your goals and see your progress. Targeted accounts have some great perks. First off, they give you clarity, so you know exactly where your money goes and can keep an eye on your spending. Plus, they give you more control over your money, helping you manage it better and avoid any surprise expenses. And let's not forget about motivation. Seeing your savings grow for something special keeps you pumped to stick to your budget. Last but not least, number 10. Learn about the principles of financial independence and early retirement, also known as FIRE. Studying the financial independent retire early principles can be a game changer in your financial journey. FIRE is a lifestyle and financial approach that focuses on aggressive saving and investing to achieve financial independence at a younger age. The core idea of FIRE is to build up enough assets to generate a sustainable income that covers your living expenses, allowing you to retire early and pursue your passions without relying on traditional employment. This is typically done by saving a high percentage of your income, often around 50% or more, and investing in low-cost, diversified portfolios to maximize returns. FIRE principles emphasize frugality, intentional living, and long-term financial planning. People who follow this model often cut out unnecessary expenses, optimize their tax strategies, and prioritize investments that generate passive income, such as index funds, rental properties, or dividend stocks. By understanding and implementing FIRE principles, you can work towards financial independence and retire early, giving you the freedom to live your life on your own terms. Well, that's it for today. Thank you for watching this video on 10 ways to increase your financial IQ. Let us know in the comments below what your favorite lesson from this video is, and let us know if we missed anything. See you soon!